Hey Puppy Trades! I wanted to do a video analysis update of the stock market. We'll talk about the S&P 500, the Dow Jones, and the Nasdaq. We'll talk about American Airlines, XLE, the oil stocks, Carnival Cruise Lines, and Disney, as well as Boeing and United Airlines. We'll talk about big tech like Microsoft, Google, Facebook, the Nasdaq, Tesla, and Apple, as well as Amazon and Netflix. We'll talk about crypto a little bit. So let's get right into it. This is a SPY. This is my kind of minimum shortest term expectation are these small numbers right here. We go on a wave one, we have an ABC correction, we put in a wave two low, then we go on a wave three rally, and we put in a wave four low at the 38.2% retracement, which is 403. So invalidation levels for a wave four are the 50% retracement of wave three, which is 397, and the wave one high, which is 394, right? But right now, 403, if that's not broken, the length of wave one placed at the wave four low would take SPY all the way to 430. We also talked about how the volatility index, the VIX, is giving us a really good measure right now. If we see that 27.50, 27.60 is not broken on the VIX, then I expect we're going to have more of this volatility crush that is going to be giving huge fuel for a move higher in the stock market. So let's talk about that. Let's talk about the bigger picture for SPY, right? So 403, if it's not broken, we're going to 430. 397 to 394 would be the wave four invalidation levels. So let's talk about SPY right now on the bigger degree. It's very similar to the Dow Jones ETF DIA, but there's one key difference. Let's see if we can spot it. So there's a wave one that is the first leg of a bull flag that is subdivided into 1, 2, 3, 4, 5 waves. We have an ABC correction and we put in a wave two low on September 24th. So that September 24th low is not broken on SPY. The length of wave one placed at that wave two low takes SPY to 460. So, 460 is the destination for this wave three minimum target for SPY. The smaller degree count is the path, right? How are we going to get there? But the destination of 460 is ultimately the target, right? So SPY does not break below that low of this September 24th low is not broken. So there's two ways to count SPY. The first way to count SPY is that this is a wave one, this is a wave two, this is a wave three that is put in the middle of January. And then we have a wave four correction at the end of January. So this is one way to count SPY. We put in a wave three and a wave four in the middle and end of January. So what would that mean? Well, that would mean that when SPY completes a fifth wave higher, it's completing wave five of wave five, right? Well, then bulls would be looking for a big correction, right? We're completing wave five of wave five. Time to be scared. What's the problem with that count? Well, the problem with that count is that the Dow Jones ETF DIA is almost identical, but there's one key difference. And we're also going to look at other components of the Dow Jones, some of these airlines, Boeing, Carnival Cruise Lines. We're going to look at Disney and talk about how the reopening stocks and the oil stocks, they're showing a lot of upside and they may be the best gauge right now. But let's look at the Dow Jones ETF DIA. It's very similar to SPY. It goes on a wave one that is subdivided into 1, 2, 3, 4, 5 waves. So that's the large degree wave one. It also completes an ABC correction and puts in a wave two low. So the length of wave one placed at the wave two low takes the Dow Jones ETF DIA to 372. So 372 is the destination for DIA in the same way that 460 is the destination for SPY. The smaller degree count is figuring out how we're going to get there. So how are we going to get there? Well, look at this key difference. So this is the 924 low for the Dow Jones. Notice that it is broken, right? So this low is broken on 924 on the Dow Jones. It is not broken on SPY. So remember, SPY, you can count this as a 1, 2, and then a wave 3 high is put in the middle of January, and a wave 4 low is put in at the end of January. But the Dow Jones, you can't count it that way. You can't count this as a wave one and a wave two because the Dow Jones ETF DIA breaks below the September 24th low. So you can't count this as a wave one and a wave two. And that means you can't count the January high as a wave three, and you can't count the end of January low as a wave four. So there's two ways to count SPY, but there's only one way to count the Dow Jones. The Dow Jones ETF DIA can only be counted as a wave one high that is put in the middle of January, and a wave two low is put in at the end of January. So what's that mean for DIA? Well, that means that when the Dow Jones ETF completes this fifth wave higher, right, when it goes on the length of wave 1, placed at the wave 4 low, it's going to be completing wave 5 of, not wave 5, but wave 5 of wave 3. So you're not looking for a big crash afterwards. You're looking for a shallow, choppy, sideways wave 4 correction before a fifth wave higher, which would be the length of wave 1 placed at the wave 4 low, would take the Dow Jones ETF DIA to the 380s. Well past what we call the destination of 372, well past what we said is the comparable level of on SPY of 460. So let's keep in mind that for the Dow Jones, important wave 1 high is put in the middle of January, and an important wave 2 low is put in at the end of January. So let's look at SPY right now with that in mind. If we can't count this as a wave 1 and a wave 2 on the Dow Jones, we probably shouldn't count it as a wave 1 or a wave 2 on SPY. What it most likely is, in my opinion, is that this wave that we put a high in the middle of January is not a wave 1, or is not a wave 3. It's a wave 1. And then this correction that we have at the very end of January isn't a wave 4, it's a wave 2. Just like the Dow Jones, right? This is the only way you can count the Dow Jones, where a wave 1 high is put in the middle of January, a wave 2 low is put in at the end of January. And then SPY, like the Dow Jones, when it goes on this fifth wave higher, and when it reaches 430, it wouldn't be completing wave 5 of wave 5, it would be completing wave 5 of wave 3. And then you're not looking for a big crash. You're looking for a shallow, mostly sideways, wave 4 correction before a fifth wave higher, which would be the length of wave 1, took SPY all the way into the 260s, past what we called the destination of 460, past what we called on the Dow Jones destination of 372. So the bottom line, in the short term and in the medium term, if you look at the Dow Jones, you look at the reopening stocks, you look at the oil stocks, there's a clear message that the summer bull run, which will not be in a straight line, but the summer bull run that is coming, it may be best for bulls to be looking at this destination target of 460 now. And there's a good chance that, you know, even if this isn't the end, that this sell-off, right, this huge VIX spike is providing the fuel now that we need to get to 460, and the path to 460 is going to happen quicker than a lot of people think. So for SPY, if we're above 403, if we're above the 50% retracement of wave 3, which is 397, we're going to 430 for this fifth wave. But this most likely won't be wave 5 of wave 5 and we crash. It's going to be wave 5 of wave 3. We most likely will consolidate sideways and then go on a fifth wave higher. And ultimately, we have the path now to this destination of 460. So let's see how that looks, you know, on the oil stocks. Like, is there any other side of the market that really supports this thesis? And there's a lot. Okay, the most glaring is XLE. So XLE, these are the oil stocks. XLE, Chevron, you know, MPC, they all form this very important wave 3 high in the middle of March with the airlines, with the cruise lines. And notice something really important. On XLE, we go on a wave 1, we have an ABC correction, we put in a wave 2 low, and then the 161.8% extension of wave 1 is the wave 3 target. So we have not reached that target yet for XLE, nor have we reached it for Carnival Cruise Lines, where it goes on a wave 1, the 161.8% extension of wave 1 is the wave 3 target, nor have we reached it for American Airlines, where it goes on a wave 1, the 161.8% extension of wave 1 is the wave 3 target, or United Airlines or Boeing. We'll get to those charts too. But XLE is a very clear example that we may be going higher right now. And a lot of people just don't notice because it's XLE, right? It's oil, it's boring. But this is a wave 1. We have an ABC correction, we put in a wave 2 low. The larger degree wave 3 target is 61. This large wave 3 is subdivided into 5 waves very cleanly, where the length of wave 1 placed at the wave 4 low would take XLE all the way to 61, right? So we're going on this run to 61, And XLE is already broken above this wave 3 high in the middle of March. So if XLE is above 47, 46, it's going on a fifth wave to 61. It's going to the median of this pitchfork to complete this wave 3. And remember, that's just going to be wave 3. We have a shallow wave 4 correction. Then we go on a fifth wave higher that is at least the length of this big wave 1. Right? So oil is clearly not done on the upside. Chevron is the exact same idea, where this mid-March high has already been broken. Let's look at United Airlines. Let's talk about the airlines. Let's talk about Boeing. So American Airlines also goes on a wave 1, has an ABC correction and puts in a wave 2 low. The wave 3 target is the 161.8% extension of wave 1, which is 31. So I believe this move from 111 to 315, which is about 2.5 months, will be replicated. We're breaking out right now on American Airlines. We're going to go the length of this move, placed at this low. We're going to go to the wave 3 target, which is 31.79. And I believe we're going to get there in the next 2.5 months. We need to see American Airlines hold above 18 to 19 for now. We need to see United Airlines as well play out with this count. So United Airlines is a very clean picture. It's a wave 1 and a wave 2. The 161.8% extension of wave 1 is the wave 3 target of 67. Okay, it's the exact same idea with Carnival Cruise Lines. We haven't reached the wave 3 target yet. We haven't reached the wave 3 target for XLE, the oil stocks. Many of the airlines, many of the cruise lines are showing more upside. And this summer run in the market, while it's not going to be in a straight line, is likely beginning now. So this is United Airlines. We go on a wave 1. We have a wave 2. The 161.8% extension of wave 1 is the wave 3 target. So this large degree wave 3 is subdivided into 5 waves. This is wave 1, wave 2, wave 3, and ABC correction puts in a wave 4 low. I believe the length of wave 1, which is from 9/21 to 11/30, right? That's a 2.5 month move, right? 2.5 months. The length of this move, placed at the wave 4 low, would take United Airlines all the way to 69 in the next 2.5 months, lining up with American Airlines, lining up with Carnival Cruise Lines. Carnival Cruise Lines goes on a wave 1, has an ABC correction. It puts in a wave 2 low. We go to the 161.8% extension of wave 1 for the large degree wave 3 target. I believe we're going to get there by filling out this bull flag, where we go on a 125 to 315, less than 2 month run. And if Carnival Cruise Lines, I think very tight would be 23, is above 23. The length of this run, which is 2 months, placed at the low. In the next 2.5 months, we're going to see Carnival Cruise Lines reach 36, right? So do you see the pattern? United Airlines, American Airlines, Carnival Cruise Lines, all these reopening stocks, all these oil stocks, all these industrial components, they're showing signs of much more upside. Disney is another reopening stock that is showing a lot of signs of more upside. So this is a wave 1 and a wave 2. It goes on a big wave 3 impulse, and it completes an ABC correction at exactly the 38.2% retracement of wave 3. So the invalidation level is the 50% retracement of 155. The most reasonable stop is this low of 160. If we're above 160, if we're above 155, the length of wave 1 placed at the wave 4 low would take Disney on a wave 5 to 216. This wave 1 is from 316 to 601. That's about 2.5 months. Right, so Disney, 2.5 months, it's going to be much higher. American Airlines, 2.5 months, will be much higher. Carnival Cruise Lines, 2.5 months, will be much higher. United Airlines, XLE, Chevron, a lot of these stocks, like Boeing and the Dow Jones and the reopening stocks and the reopening sector is going to be dramatically higher, right? The oil stocks, the cruise lines, the airlines, most likely the banks with it. And so this run this summer, where SPY will ultimately reach 460, looks like it's already happening right now. So this is Boeing. It goes on a wave 1. We have an ABC correction. We put in a wave 2 low. We have another wave 1 and another wave 2. So the 161.8% extension of wave 1 is the wave 3 target. I believe that 307 will be reached. This is another wave 1 and another wave 2. So this stop for the stop level for Boeing is 210, because that's the 78.6% retracement of this wave 1. The invalidation level is the wave 2 low of 191. So this run for wave 1 is from 128 to 318, right? So 2.5 months, just like Disney, just like United Airlines, just like Carnival Cruise Lines, Boeing will be dramatically higher. Boeing is going to go on a run to 307 in the next 2.5, 3 months, as long as 210 to 191 is not broken, right? So Disney, Carnival Cruise Lines, United Airlines, Oil Stocks, and XLE, American Airlines, they're all showing signs that 2.5 months from now, 3 months max, they're going to be dramatically higher. And I think that really lines up with SPY being in the 460s 2.5, 3 months from now. And ultimately, I am expecting that SPY will reach 460 by the end of the summer, as I've said for a very long time. So where would that leave tech into all of this? Well, the cleanest counts we have right now for tech are Google and Microsoft. But let's look at the Nasdaq right now and see if the Nasdaq is painting a similar picture. So I believe the Nasdaq on the bigger degree is very similar to the Dow Jones. It's very similar to SPY. It goes on a wave one, has an ABC correction, and puts in a wave two low. The length of wave one placed at the wave two low would take the Nasdaq QQQ ultimately to a destination of 398. So on the Nasdaq, we're going to talk about my worst case scenario. It's spoiler alert, it's not really that bad. We'll talk about Apple and Tesla. Then we'll talk about Facebook, Microsoft, and Google for maybe the more aggressive view of the market right now. But the bigger degree view for the Nasdaq QQQ, this is a wave one. We have an ABC correction. We put in a wave two low. The length of wave one placed at the wave two low takes the Nasdaq QQQ to a destination of about 398. That really lines up with the Dow Jones and SPY, bull flag / wave one placed at the wave two low. So let's look at the Nasdaq. I want to go over my worst case scenario. Now keep in mind, I don't have any daily candles where 316 has been broken. So in my last video, I went over the more kind of conservative view if the 316 is not broken. Okay, in this video, I'm just going to do the worst case scenario for if 316 was broken. What would tech look like? Would it be, how bad would it be if 316 was broken? I think it would look something like this. This is all going to be, let me make sure I can get these fibs. So this is all going to be a wave one. Basically, the Nasdaq would look exactly like Amazon, where this is all a wave one from 3.5 to 429. So from 3.5 to 429, about a 2-month run. This is all a wave one, right? That's extremely bullish. That's more bullish than anything that I've said up to date, that this would all be a wave one. So then what would it look like if the Nasdaq broke below 316, which is not something I'm projecting. I'm just using the Nasdaq right now to give my worst case scenario. This would be a wave one. We'd have an A, B, C correction being complete at the 61.8 to 78.6% retracement zone of wave one. That's where a wave two would end. So the stop level for that type of setup would be 307. The invalidation level would be the beginning of wave one, which is 297. So if 316 were broken, I think it'd be the length of wave one placed at the wave two low. And that would be a very conservative wave three target. Okay, the very conservative wave three target from the box between 307 and 314 would be 354. All right, that would only be the length of wave one placed at the wave two low. Wave three is actually bigger, stronger, and faster than wave one, and it's followed by a shallow wave four correction, followed by a fifth wave higher. So I believe the Nasdaq, if 316 were broken, which I'm not projecting, would still be an extremely bullish opportunity to buy in this box, right? And then we'd be looking for a wave one, an ABC correction would put in a wave two low. We go on a third wave higher that conservatively would take QQQ into the 350s, and that would not be the top by this count, because there would only be one way to count it. It'd be a 1, it'd be a 2, and then wave 3 at the very minimum goes to the 350s. That wouldn't even be the high. That would be the conservative wave 3 target. We have a shallow wave 4 correction, and then we go a fifth wave higher, which is the length of wave 1 replicated again, right? So this is keep in mind, this is my worst case scenario, right? This is the worst thing I could see for the Nasdaq right now, is a huge wave 2 reaction between 307 and 314, with a stop below 307 and an invalidation level of 297, right? What does this look like exactly? This chart, to even down to the very dates of the lows and the highs, is identical to Amazon, right? This is identical to Amazon, where we see on 3.5, we begin a 1, 2, 3, 4, 5, large degree wave 1. We have an ABC correction, and we put in a large degree wave 2 at the 61.8% retracement of wave one. So that's where wave two would be put in. The stop for wave two is the 78.6% retracement of wave one. In this case, that's 3,025. The invalidation level is the beginning of wave one. So if we're above wave one, if we're above the beginning of wave one, which is 2,881, if we're above the 78.6% retracement, which is 3,025, the length of wave one placed at the wave two low takes Amazon all the way to 3,802, right? This move is from 3.5 to 4.30, right? That's 2 months, 2.5 months. Amazon's dramatically higher. Boeing's dramatically higher. Disney, Chevron, Carnival Cruise Lines, American Airlines are all dramatically higher, you know? But SPY's crashing. That doesn't make any sense, right? That doesn't make any sense. And we're gonna talk about, when we talk about crypto, we'll talk about how I'm using these correlations, why I use these correlations. But Amazon being dramatically higher, Boeing being dramatically higher, Disney being dramatically higher, that all kind of fits in with SPY going to that 460 target. You know, if it's not right from here, I don't think there's too much lower, right? And we have our levels, right? This is why, you know, wave theorists, we're levels to levels traders just like everyone else. We just actually have price targets if those levels are held, right? We don't just analyze. We actually make predictions, and we have certain levels that we need to see hold. And right now, I think the most important level is 27.65, 27.50 on the VIX. And to me, it's full bull if we're below this level, right? If the VIX is below 27.65, all these volatility spikes are going to be tops, and we're just going to have this insane melt up, all right? So Boeing, Carnival Cruise Lines, United Airlines, American Airlines, you know, Amazon are all going to be dramatically higher. So QQQ is just illustrating my worst case scenario. If we saw more downside, which I'm not projecting, I would never short the Nasdaq ever. I would never short Apple. I would never short Tesla. I would never short Bitcoin ever. I would never do that. That doesn't make any sense. That's the worst way to allocate capital, in my opinion. So this is a wave one. We have an ABC correction putting in a wave two low. My worst case scenario is that the Nasdaq has an impulsive reaction from this box between 307 and 314. And goes on a wave three that conservatively takes it to the 350s. It lines up with Amazon. It lines up with Boeing. It lines up with Carnival Cruise Lines. It lines up with every stock, right? Google, right? Wave one. I've charted every stock in the market, right? Like this, it's not like there's just one magic chart, right? This is the entire market, the entire industrial sector that 2.5 months from now is going to be dramatically higher. Disney, Nike, Procter & Gamble, right? So many stocks have a lot more upside. This is a wave one for Google, and a wave two, we go to the 161.8% extension of wave one, which is this wave three high. Now we're putting in an ABC wave four low. The wave one high is the invalidation level for a wave four. If 2,145 is not broken, the length of wave one, which is 7 weeks, placed at the wave four low, will take Google all the way to 2,648. So 2,648 is the price target 2 months from now. Amazon's going to be much higher 2 months from now. Google's going to be much higher 2 months from now. Carnival Cruise Lines, Boeing, United Airlines, right? The whole stock market is going to be much higher, 2.5 months from now. So I think Facebook is another good example of, kind of showing my most aggressive scenario. And then also I'll also show my worst case scenario with Facebook. So Facebook, we've talked about, this is the wave one. We have an ABC correction. We put in a wave two low. And then we talked about how we go on another wave one and a wave two with Facebook. And the reason we don't think that we can count this as a 3 and a 4, where we're completing a wave 5, is because we've broken to a new high on the relative strength index. So it is a rule. The relative strength index should make a lower low, while a wave 5 makes a higher high. If we don't have RSI divergence, we shouldn't be counting it as a wave 5. It's not my favorite rule. It's not the one that I use the most common, but yes, this is a clear example. The relative strength index has made a new high. So we can't call this a wave 3, 4, and 5. I believe Facebook right now, I'll just show you the worst case scenario I have for Facebook. I'll show you the most aggressive scenario I have for Facebook. The most aggressive scenario is that this low of 296 will hold. All right, we've already tested it and we didn't break it. So if this low of 296 holds, this is a wave 1, this is a wave 2, Facebook will explode out of this nest. It's going to go on an insane run from 3.4 to about 4.8, right? So 2 months, 2.5 months with Facebook would be conservative, that we're reaching 359, 357, right? And that's because the length of wave 1 placed at the wave 2 low is a conservative wave 3 target. Now, Facebook has not broken below 296, so that view is still perfectly intact. But like QQQ, I want to talk about maybe the worst case scenario for the stock market and show how it's really not even that bad for big tech. So this would be the worst case scenario for Facebook, is if 296 was broken, what would it look like? It would be an insane buying opportunity, an absolutely insane buying opportunity. What would we be looking for Facebook if 296 is broken, which I'm not projecting, but if 296 was broken, I'd be looking for an A, B, C correction for Facebook, where the length of wave A placed at the wave B high leads to an equal legs wave C target of 282, which is exactly the 61.8% retracement of this move. So what would that mean for Facebook? In the worst case scenario I have for the stock market, where Facebook breaks below 296, it's a crazy buy, because this would all be wave 1. We have an ABC correction at the 61.8% retracement, where wave A equals wave C. We put in that wave 2 low, and then the length of wave 1 placed at the wave 2 low takes Facebook all the way to the 360s, right? So I have really no scenario where this summer tech stocks in the Nasdaq, like Facebook and Microsoft and Google and Amazon, are dramatically higher. And that's important to understand when we talk about Apple and Tesla. So let's look at, we talked about Google, we talked about Amazon. Let's look at Microsoft real quick. I think Microsoft right now is really one of the cleanest pictures we have for the stock market, because we've already predicted a big piece of the puzzle, right? We predicted this whole move in time and price. So this is a wave 1. We have an ABC correction. We put in a wave 2 low. I posted a setup on Microsoft in this range. It hits the time and price target. And so there's a couple things to say about Microsoft. The first is that this impulsive wave, which we were expecting would be a wave 3, did not reach the 161.8% extension of wave 1. So typically a wave 3 will reach the 161.8% extension of wave 1, which Microsoft did not do. Okay, so if we're calling this a wave 3, then we're really ignoring that wave 3 didn't reach the 161.8% extension of wave 1. That wouldn't be the worst thing to do, because it did pass the equal legs target for wave 1. But what else would we be ignoring if we call this a wave 3 and a wave 4? We'd be ignoring that Microsoft has already gone past the 50% retracement of wave 3, right? So if we're calling this a wave 3 and a wave 4, we're ignoring two pretty big things. The first thing we're ignoring is that wave 3 was pretty short. It didn't reach the 161.8% extension of wave 1. The second thing we're ignoring is that wave 4 didn't go below the 50% retracement of wave 3. Or wave 4 did go below the 50% retracement of wave 3. So what more accurately is Microsoft's most likely? It's most likely this is a wave 1 and this is a wave 2. And this is another wave 1 and another wave 2. But what's really important to point out, because this is going to apply to Apple, it applies to QQQ right now. What's really important to point out is that whether or not you call this a wave 1 or a wave 2, or whether or not you call this a wave 3 and a wave 4, the minimum expectation stays the same. So that's why a lot of times I'll keep the wave 3 and I'll keep the wave 4 count on, just so it's the same minimum expectation. Because either way, the length of this wave 1 placed at this wave 4 low or a wave 2 low is the minimum target. Okay, so either way, the length of this move placed at this wave 2 low is the minimum target of about 272. So if we're calling this a wave 2 for Microsoft, what we're expecting is that it will have a very impulsive reaction between the 61.8 and the 78.6% retracement zone. The 78.6% retracement of 232 would be the stop. The invalidation level is the beginning of wave 1, which is 224. If those levels hold, Microsoft is expected that it will go. The reason that the length of wave 1 placed at the wave 2 low is conservative is because this move right here is shorter than this. So we can take this move and have a conservative target if we place it at this wave 2 low, because wave 3 and Elliott wave theory is actually stronger and faster than wave 1. So if this is a wave 1 and this is a wave 2 and this is another wave 1 and another wave 2, between the 61.8 and the 78.6% retracement, of 232 to 239. We're expecting Microsoft to complete wave 2 and have a huge wave 3 higher. The minimum target would take Microsoft all the way to 272. This move was in 6 weeks. So 6, 8, 10 weeks, 2 months, 2.5 months from now, while Boeing's much higher, Carnival Cruise Lines is much higher, United Airlines and Disney and Amazon and Google are much higher. Microsoft as well would be going on a huge rally higher. We want to see 232 hold. I want to see a big wave 2 reaction from the zone, and then Microsoft will go higher. I think Microsoft right now, if you look at it, is a reason, the being bearish tech could be a very dangerous idea for short sellers, okay? I think shorting tech right now is probably the dumbest trade in the market, but I think the length of this wave 1, because it's actually shorter than this move, will provide a very conservative target of 272. I believe that will be hit in the next 6, 8, 10 weeks. The next 2 months, ideally. The big level right now is the 78.6% retracement of 232. I really want to see a big reaction at the 61.8% retracement of 239. So that's Microsoft, Google, Amazon, Facebook. I've made the case they're going a lot higher. So what the hell is going to happen to Apple and Tesla, right? Let's talk about Tesla first. So the first thing to acknowledge about Tesla is that I've been wrong about Tesla. I've been very wrong about Tesla. I haven't been very wrong about Tesla, but I've been wrong about Tesla. Okay, and I'm not afraid to admit that. But I understand Tesla's a sexy stock. I haven't gotten it right. So what do the bears think about Tesla? What do the people who disagree with me think about Tesla? Well, first, let's go over what I thought about Tesla and why it was wrong. I thought that this was an ABC correction for Tesla, and then it was going on a wave 1 and a wave 2, and then wave 3 would pass the 161.8% extension of wave 1, which was at 828. Right? I literally have these numbers memorized, but I believe that I thought that Tesla was going to go on a wave 3 past 828, and the reason I thought that was because Microsoft, the Nasdaq, Apple, so many, even XLY, the consumer staple, the consumer discretionary sector, which Tesla is a huge component of, had a lot more upside. Right? The bears had this exact same projection for Nvidia, Apple, QQQ, all the tech stocks that I'm about to show you that they have for Tesla. We're going to understand the bear scenario for Tesla. First, let's talk about why I was, incorrect about Tesla. I expected that Tesla completed an ABC correction, was going to go on a wave 1 and a wave 2, and then another, I believed it was going on another wave 1 and another wave 2, and then if that was going to happen, then Tesla should have put in a low between 628 and the 61.8% retracement of 660. So if Tesla was going to do a nest, a 1-2-1-2, we should have seen a reaction. We should have seen a reaction in this box between 628 and 660, right? That would have been the wave 2 low. Then Tesla would have blasted off, right? That didn't happen. What did happen? We broke below this wave 2 low, but we haven't broken below this wave C low. So right now we're going to understand exactly what the bears think about Tesla. And this is the most popular trade right now. Is shorting Tesla. What they believe Tesla is, and when I say they, I mean anyone who does Elliott wave theory besides me. Anyone who does Elliott wave theory besides me, I can guarantee you this is their Tesla count. It's a 1, 2, 3, 4, 5 waves impulse from this high. And they're calling this a 535 flat. So a 535 flat is probably the most common corrective structure in Elliott wave theory. And this is what they've had. And they've honestly been right about this for most of it. But it's that wave C that we're going to talk about. They haven't gotten yet. So what were they saying about Tesla? They did say the exact same thing about Nvidia, Apple, and the Nasdaq. That this was a 1, 2, 3, 4, 5. And then this was the first, wave A of a flat. So I actually don't need I have this wave A right here. So this is what they had. That this was a wave A. We were going to go on a wave B and put in a wave B high, right? And that would be where the length of this move placed at this low reached equal legs. And they were right about that, right? We did put in a high right there. So what's the final part of their expectation? Right? So they had that 1, 2, 3, 4, 5 to make an A Then they had an A, B, C, where wave A reached the length of wave B and hit wave C. So they believe that is the wave B high. So now here's the kicker. They've got Tesla going the entire length of this downfall placed at the wave B high, right? So this is the, this is the most popular trade right now, is catching this extra, this extra $150 lower to about 420. And the Tesla would put in a wave C low, right? I'm telling you, I've seen this story before. I've seen this exact same scenario. This is the exact same scenario. I'll tell you from experience. This is exactly what they had. When I say they, I'm talking about every single bear, right? When people say wave theory is BS, I get it, right? Because there's a lot of bad wave theory out there. But this is exactly what every Elliott wave theorist had about Tesla back in November. I was the only person who was bullish, except for very few. This is exactly what they had. That we were going to go on a wave A, B, and C. So they were waiting for something that never came, right? They were waiting for Tesla to go to 292. Some people were shorting it. We blew up. Just absolutely blew up for Tesla. I absolutely destroyed it right around the election, right? And then this is exactly what they have now. It's almost deja vu, where they're thinking they're just going to go the length of wave A, placed with the wave B high, and reach this wave C low, okay? So it's very important to understand the I was wrong about Tesla was 628. 660 to 628 was the I was wrong about Tesla. The bears are right about Tesla is 539. So once 539 is broken, if it is broken, then the wave theory expectation is the length of wave A placed with the wave B high would take Tesla to 420. Okay? I would never short that. And honestly, I think that we might be jumping the gun, assuming that 539 is going to be broken. Why would I never short this? Well, the Nasdaq looks like it's about to rip, right? Apple looks like it's about to rip. Microsoft looks like it's about to rip. Nvidia and Amazon looks like it has a lot more upside, right? So what could this be? Well, right now, I think it's important to realize the bulls need to recover 631. Right? We really can't talk about Tesla as a high probability setup unless it's above 631. Here's why I would never, ever short Tesla. And here's why I think a lot of people are about to get smoked right now. I really do. This is not a good sign for bears. The most popular trade right now is shorting Tesla 150, that many dollars. But this is what I think it could be, right? And until we get below 539, there's a very good likelihood that this is a wave 1. We're completing this kick out wave 2 low. And until Tesla gets below 539, I don't think the bulls are out of it yet in their argument. Until we're below 539, it's still technically possible that Tesla has put in a wave 1 leading diagonal. It's completing a wave 2. And it's going to go on a wave 3 impulse to 929 because that's the 161.8% extension of wave 1. Now, I want to see Tesla recover the 61.8% retracement of 631 before I post the setup with a time target on Tesla. But this is where Tesla is, 539. That's the bears are right level. 628 was the puppy trades is wrong level. We're somewhere in between right now. And I think if you look at the Nasdaq, where the worst case scenario is a huge wave 2 buy between 307, 314. You look at Google, you look at Microsoft, you look at Facebook, you look at all these big tech stocks that are getting ready to rip. You look at the rest of the entire market, United Airlines, Carnival Cruise Lines, Boeing, Amazon, and oil. I really just don't think it makes sense to say Tesla is going to be down, in the 420s during that time, right? And that's me using correlations in my trading, using the exchange traded funds, using the sectors that Tesla is in as part of my analysis. We're going to talk about that when we talk about crypto. Let's talk about Apple real quick. So Apple, very similar to Tesla, except there's one key difference. Tesla did not pass the 161.8% extension of wave 1, which is 828 for Tesla. Tesla did not break 828, but Apple did. So I believe Apple right now is almost identical to QQQ, where the worst case scenario is that we have a huge wave 2 reaction. And that we're going to see Apple is going to go the length of wave 1. Apple's going to go the length of wave 1, placed at the wave 2 low, and it's going to reach the minimum wave 3 target with QQQ, with Facebook, with Microsoft, with Google. And it's going to reach the minimum wave 3 target, which is the length of wave 1, placed at the wave 2 low. And we're going to see Apple reach 143. This move is from 3.8 to 4.29. 2 months, 2.5 months from now, it's the same thing as Boeing. It's the same thing as Carnival Cruise Lines. It's the same thing as Microsoft. It's the same thing as Google. It's the same thing as Amazon. And it's literally the exact same thing as QQQ, where I'm expecting a huge wave 2 reaction between the 61.8 and 78.6% retracement zone for wave 2. For Apple, that's between 120 and 124. So if Apple is between 120 and 124, I'm expecting the length of wave 1 placed at the wave 2 low will take it to 143. I think that's going to happen in the next 2.5 months. And then in this count, that's extremely conservative. In this count, that's extremely conservative because that's the minimum wave 3 target. Wave 3 would actually be a lot bigger. It'd be followed by a shallow wave 4 correction, and then we'd be looking for a 5th wave higher, most likely on a retest of that wave 1 high. Okay, so that's big tech. I think Google, Microsoft, Amazon, and Facebook, are really a lot of proof big tech's going higher. I think United Airlines, Carnival Cruise Lines, Boeing, American Airlines, and Disney and oil stocks are a lot of evidence that the entire market is going higher. But what's that called? Those are called correlations. Okay, so it's really important to realize that I'm using correlations in my trading, but that's also why it's really important, not to pick favorites, right? Yeah, I think Apple and Tesla are going to go up. And I think that a big piece of evidence are the charts of Facebook and Microsoft and Google and Amazon and the Nasdaq. And I'm probably going to be right? But the most dangerous thing to do is to put all your eggs in one basket, right? To me, if a whole portfolio, hypothetically, right, because this isn't investment advice, if a whole portfolio was Google, Microsoft, Apple, and, Tesla and Facebook, right, that's all big tech. If a whole portfolio was Microsoft, Carnival Cruise Lines, Nike, and Netflix, right? So, something completely different. Then you have diversification. And my trading system is not designed to have every single stock do exactly what I say. It's designed for about 60 to 70% of them to do exactly what I say. And that honestly is around what I do. Okay, so let's talk about some other stocks in the market. Talk about what I mean by that. So what am I talking about when I'm using correlations in my trading? I think this video from April 8th is a very, clear example that I posted a video of Litecoin, Ethereum, and Bitcoin. And I basically make the argument that they have the exact same setups, essentially. That Bitcoin, Ethereum, and Litecoin have these exact same setups. They have a wave 1, they have an ABC retracement and putting a wave 2 low. Then Litecoin breaks the wave 1 high, and I had Litecoin going to 311 from 223, right? And that's exactly what happened. Ethereum was very similar, where I had Ethereum at around 2,000 going to about 2,700. It blew past that target, right? And I thought, okay, well, Ethereum's going to go up, Litecoin's going to go up, Bitcoin's going to go up too. So I had Bitcoin in this group as another one that completes a wave 1, an ABC correction, and puts in a wave 2 low. So hypothetically, if a trader takes, Litecoin and Ethereum and Bitcoin, well, Bitcoin stopped out at 47K. But Litecoin and Ethereum, they went all the way to their target. The gains were a lot bigger than the small Bitcoin loss, right? And that's why it's really important not to ever pick favorites, but especially know that I will never pick favorites. I'm as excited about Nokia and Nike as I am about the electric vehicles. And I'm as excited about the silver metal miners as I am about the solar stocks, right? And a lot of people, because they're fundamental traders, they can't do that. But here's a perfect example of me using correlations in my analysis and it being very effective, right? Anyone who hypothetically made money on Ripple, you have correlations to thank. I said Ripple goes on a wave 1, has a wave 2 low, has gorgeous reactions on the median, has gorgeous reactions on the lower bound. And I said that this was the same setup on Ethereum, right? So I have this Ethereum setup where it's going to break above 1400, right? And the reason I thought Ethereum was going to break 1400 was because Bitcoin had already broken its, comparable 2017, 2018 high, right? And that did happen. I had Litecoin at 104, going on a huge rally based on the fact that Bitcoin had already broken its high, right? This is sector analysis. This is using correlations. And I said, essentially that Ripple was going to do the exact same thing. It was going to go the length of wave 1, place at the ABC, wave 2 low, and that was going to take it all the way to 3.40. I believe that's going to happen. What's important to realize, though, is that that's a very similar phenomenon as to what we're doing now, right? XLE, the oil sector, has already broken above this wave 3 high that the airlines and the cruise lines formed. So I think we have a sneak peek right now. The United Airlines, American Airlines, and Carnival Cruise Lines, they're going to break above this high that is formed in the middle of March in the same way that XLE, the oil stocks, have already broken above that high they formed in March. But what's really important when you're using correlations is to diversify, right? That's really important. So let's talk about some correlations right now. Let me just finish the point on XLE and Carnival Cruise Lines. That Carnival Cruise Lines and American Airlines and Boeing all formed this exact same high with oil in the middle of March. And we have these counted basically the same way, that's a wave 3 high and a wave 4 low, right? Just like United Airlines, it's a wave 3 high in March and it's a wave 4 low. The oil stocks have already broken above that wave 3 high. And I'm using that to say, well, it's the exact same high and the exact same low on XLE as it is on United Airlines, and it is as it is on Carnival Cruise Lines. And I'm using that to say we're going to break back above this 315 high for the airlines. That's just one part of my analysis. So let's talk about some, kind of correlation analysis right now with to figure out where Bitcoin's going. So this is my Ripple chart, right? If I think Ripple is going to go dramatically higher, right, I'm probably not going to think the crypto bull market is over, and I don't. I think Ripple has a very clear wave 1, has an ABC correction, puts in a wave 2 low, and now it's beginning a wave 3. If we take the beginning of wave 1, connect it with the high of wave 1 and the low of wave 2, we have a gorgeous reaction on the median. We have gorgeous reactions on the lower bound. I believe Ripple is going to go the length of wave 1, place at the wave 2 low. It's going to go to the median of this pitchfork. The median of this pitchfork is all the way at 3.40, right? And that's the conservative wave 3 target, and we can see with our own eyes, if it reaches the median, it's going way past 3.40, right? And then that would just be wave 3. We'd have a shallow wave 4 correction. We'd be going on a 5th wave higher. I think Ripple is going all the way to 5, in just this cycle, right? So if I think Ripple is going to 5, do I think Bitcoin's going to crash? Probably not, right? Is it just Ripple? What was the other, stock in this, tweet that we were looking at? We were looking at Litecoin. We were looking at Ethereum too, right? So what about Litecoin? Litecoin also has a very beautiful pitchfork where it goes on a wave 1, has an ABC correction and puts in a wave 2 low. And now Litecoin has gone all the way to the lower bound of this pitchfork. I believe ultimately Litecoin will go all the way to the median of its pitchfork. I think Litecoin looks something like this, where it's completing a 1, 2, 3 wave 4, and then either the length of wave 1 placed at the wave 4 low, or the length of wave 3 placed at the wave 4 low will give the target for wave 5. So if it was the length of wave 1 that was placed at the wave 4 low for Litecoin, then what would wave 5 be? Well, wave 5 wouldn't be a wave 5 because wave 5 wouldn't break above the wave 3 high. So if wave 5 isn't going to be the length of wave 1, most likely wave 5 for Litecoin will be the length of wave 3 placed at the wave 4 low. And I believe Litecoin is going to go the length of wave 3 placed at the wave 4 low. And as crazy as it sounds, Litecoin's going to replicate this entire run. This runs from 316 to 510, right? 316 2020 to 510 2021. That's about 14 months. So yeah, that's a long time away. But I think pretty conservatively, a year from now, 14 months from now, we're going to see Litecoin go on a fifth wave higher all the way to 541. So I've got Ripple and I've got Litecoin doubling, right? So does it make sense to say that, Bitcoin, put in a super cycle top? No. What's another way to count Litecoin? Remember, I like to keep the wave 3 and the wave 4 on just to be conservative. But I think another way to count Litecoin is that this is a 1-2 and then another wave 1 and another wave 2 being put in at the 61.8% retracement. So it would be the exact same expectation. The length of wave 1 placed at the wave 2 low has a conservative wave 3 target of 541, right? Right now, the 61.8% retracement for Litecoin is 171. That's, pretty close to the low of 152. So 152 is, 152 is the low. The wave 1 high is 145. And the 61.8% retracement is 173. So up between 154 and 173, I would call that invalidation for Litecoin. I think 173 would be a pretty tight stop, but I think it's pretty safe to use this low of 152 as the invalidation level, and really use this wave 1 high of 145, which is pretty close, as the invalidation level. And if those hold, I believe the length of this rally placed at this low takes Litecoin all the way to 540. And I believe Ripple is going all the way to 5 as well, right? It's going to go all the way to the median of this pitchfork. So Ripple and Litecoin, I've got more than doubling, right? So if I got Ripple and Litecoin more than doubling, what does Bitcoin look like? I think Bitcoin looks something like this. It looks very similar. So this is Grayscale Bitcoin GBTC. I've got a pretty similar, pretty clear idea of where this is going. This is a wave 1. We have an ABC correction. We put in a wave 2 low. And then just like Litecoin, it's another wave 1. An ABC correction puts in another wave 2. I think what it's starting to look like for Bitcoin and Litecoin, this entire run from the March 2020 low to the 2/15/21 high is going to be replicated. It will. So for Bitcoin, the best invalidation level I have is for Grayscale Bitcoin, ticker symbol GBTC, to hold above 25, because that's the 61.8% retracement of whatever this wave is. If this is a wave 3 and ABC retracement puts in a wave 4 low, then it's just like Litecoin, where it's either going to be the length of wave 1 or the length of wave 3 placed at the wave 4 low will give a conservative target. So if it's the length of wave 1 placed at the wave 4 low, then just like Litecoin, Bitcoin wouldn't make a new high. I think most likely, just like Litecoin, it's going to be the length of wave 3 placed at the wave 4 low, and Grayscale Bitcoin is going to go to 81 in the next year. And I know it's a year from now, but that's the most conservative target, because I don't think it's actually a wave 3. I don't think it's actually a wave 4. I think it, just like Litecoin, is another wave 1 and another wave 2. I believe Grayscale Bitcoin is going all the way to the median of this pitchfork, right? And this is all over the crypto market, where the median of that pitchfork will be reached. Ripple, Litecoin, it's not just Bitcoin. But I think that the more accurate count for Bitcoin, this is between the 50 and 61.8% retracement of whatever this wave is. If it's a wave 1, we have an ABC retracement putting in a wave 2 low. Then the 61.8% retracement of 25 on Grayscale Bitcoin is a very good level to have a stop and invalidation. Grayscale Bitcoin staying above 25. We can expect the length of wave 1 placed at the wave 2 low. We'll take it all the way to 81. If you really wanted a deeper invalidation would be the 78.6% retracement, which I imagine will coincide, with this wave 1 high. So the wave 1 high is 17 on Grayscale Bitcoin. That's around the 78.6% retracement. That's probably too far away. So I think right now the 61.8% retracement of 25, if that holds, right, if we stay above 25, I think Bitcoin's putting in a large degree wave 2 low. And Litecoin is also putting in a large degree wave 2 low. And we're going to see this crypto cycle continue. We're going to see Litecoin go all the way to the median of this pitchfork. We're going to see Ripple go all the way to the median of this pitchfork. we're going to see grayscale Bitcoin go all the way to the median of this pitchfork. And if GBTC is above 25, ultimately, the length of wave 1, place of the wave 2 low, is going to see it go all the way from 32 to 81. That means we're looking at Bitcoin more than doubling. I don't believe the crypto bull market is over. I think GBTC above 25. I think Litecoin above 173. And, I think, Ripple is a lot of evidence of that. That we will be going higher, not just with Bitcoin, but as the entire crypto market. But what's the most dangerous thing to do is to be a fundamental trader and say, oh, I only pick Bitcoin, right? I only pick Litecoin. I only pick Ethereum. This is beyond wave theory, is the importance of diversification within sectors and within asset classes.